In this short video, we make the case for using the Flex MLS Price Range Statistics program as a supplement to a market analysis that is at the same time easy to generate and powerful in its ability to quickly access where the activity and therefore the opportunities lie for both buyers and sellers. So let's take a look at how we get into the program. First, in Flex MLS, click the Statistics tab and select Inventory and Production. Then select Price Range Statistics. Now you can see it's pretty much like the options in a quick search, where you can choose the parameters of interest. I'd suggest you start broad and then chunking down to the specifics. For example, maybe start at the zip code level to get the bigger picture. Then drill down further if you like in a subsequent report generation to the master plan community, subdivision, and if you want to get even more specific, a particular square footage range. The danger, of course, in getting too specific is that you end up with not too much data. So again, better to start broad before you get too specific. Let's do an example where we choose residential, single family detached, zip code 85266, and a list price range of 1.5 million and up. Notice that we need to check MLS and then change the begin date to whatever you want. I'm going back to January 1 to get year-to-date stats. Then simply click Next. Now we see the various price ranges, though all zeros below 1.5 since we said we wanted 1.5 or above. So to see those categories. Note also that under $1 million, the ranges are in $50,000 increments. They're bands of $50,000. Over $1 million, they're broken down into $100,000 brackets. But here's where we see the value. We see where the activity tends to be grouped in different ranges. They can vary within categories of active, pending, and sold. At the bottom of each status section, we see summary information. How many units, average price, etc., high and low. For client reporting purposes, you can easily copy and paste the information into a Word document for further editing. Here's an example where I've done just that. In this case, having the price range stats shown visually allows for powerful further analysis. For example, you can see in the summary I've created where I've applied some additional statistical analysis, looking at the specific pace of sold activity or absorption rate, and then with the active listings projecting the number of months supply. We report the 34 active listings over 1 million in zip code 85266. We go on to say there have been 22 sales year to date. 22 sales divided by 9 months year to date equals 2.4 sales per month. That's the absorption rate or pace of closed activity. To get to the number of months supply, we take the 34 active listings divided by 2.4 sales a month, or the absorption rate, to equal a 14-month supply. Looking more specifically at 1.5 million and above, 16 of the 34 active listings are over 1.5. There have been 7 sales at 1.5 or above year to date, or an absorption rate of less than 1 a month, 0.8 to be exact. With 16 active listings over 1.5 divided by 0.8 sales per month equals a 20-month supply. Working with a seller, this analysis might help us fine-tune how we position a home, competitively position it within a particular price range. It may be, for example, that getting just below a certain price point might make a big difference in terms of where the price range activity is. Buyers can benefit from this analysis as well, seeing where the price range activity is within their area of interest. Summing up, generating price range statistics is both easy to do and a powerful supplement in presenting information of value to your sellers and buyers.